the main thing that I wanted people to learn, and I want you to learn over time, is claiming expenses. Now, this is how you can swap costs to you from your after-tax income that you have to use to pre-tax income, and you then incur the expense, you have a profit, and then you pay tax on the profit. So we're going to explore that. But you may want to think about a side hustle. That's the sexy term, but it's just extra income. It could be offering a service. There's 55 ideas in this slide, but you could ask ChatGPT for 10 ideas for someone like you. You could give it the parameters and say, I have this amount of time available per week. I'm quite good at this. I have an internet connection. I have an Instagram following of 33 people. What would be a good way for me to make another $400 a week? And see what it tells you. But if you can create a form of income for yourself that isn't a second job, so it is not another PAYE income, it is a form of income where you go out and actively earn that income, you may be able to claim some of those expenses. So it could be offering a service, for instance. Now, let's say it is, I was going to say copywriting. That's boring. Let's just keep it simple, and you're mowing people's lawns. Now, you're going to be able to claim the costs that are incurred to go and mow people's lawns. So the fuel for the power these days for the electric lawnmower, say, but you might need to get your hedge trimmer repaired or tuned up a little bit. That would be a tax deductible expense because you need to spend that money in order to generate the income. Now, why this is important is because you pay tax on after tax on your profits. So businesses and organizations pay income tax on their profit, their income minus any expenses. Generally, businesses and organizations file their income tax returns at the end of the first year of business and pay their tax in a lump sum, blah, blah, blah. Way too complicated already. There's a cool thing these days called Henry. Now, they'll help you. So why this is massively important right now is that when you have a business stream of income and you can claim some legitimate expenses, you can also claim some home office costs. Now, for a lot of people who have never had a second stream of income, they don't understand this, but basically the IRD will allow you to claim a percentage of the costs that you have at home that you use to generate the income because you're doing admin from there, you're sending out invoices, you're doing your social media content, all those types of things. So potentially a small piece of your mortgage interest, not the mortgage repayment, the mortgage interest, which is getting higher. So it'd be great to be able to claim a percentage of that. And then, of course, maybe your rent, if you're renting, your phone bill, your internet, those types of things that you're paying at home, you may be able to claim a potential portion. Of course, you might say, well, mate, like I'm making 10 grand doing my lawn mowing and then claiming a small amount of that. So what's the point? Well, what you're learning though, so you might say, well, I've still got 5 grand of profit. Now I've got to pay tax on that 5 grand, but you're learning the game of business. You're learning the tax rules. You are learning about the things that you can claim. And you're also moving some of your costs that you would have anyway, like some internet and some phone and stuff like that, that are fundamental for running a business. You're being able to move them over into your business area so that you're not paying for them out of pocket from your employment, say. And you might go full hog and just get straight into business and keep going down that path. And then a whole heap of things more are going to become expenses to you. Can you only claim on those costs if you're paying tax on your side hustle? Yeah, like basically income less expenses equals profit, pay tax on the profit. So just to be clear, when you pay expenses, you don't get given that money back. You have income minus the expenses and you tell the IRD what that is and you've got to pay tax on that. But this is where Henry do this for you. And they have a guide, which I'll include this link in there as well, so you can go and have a look. But there's a guide to the expenses. Now, interesting, they've got Aussie dollars there, so they must be branching out into Australia. But they'll tell you, what is a tax deduction? So you can learn about some of this stuff. And there we go, 75 grand of full income, minus some expenses. You only pay tax on the 68%. And who can claim deductions? All these different types of things. What expenses are tax deductible? Business expenses. And down here, it's got a list of some of the expenses that are the most common that people who use Henry claim. So depreciation on some of your assets, subscription fees, light, power, heating, mobile phone bills, equipment purchases, internet bills, mortgage interest, professional insurance, rent, ACC levels, motor vehicle expenses. Now, YouTube subscriptions, so you can do your learning, so you can get better at editing, and then you can sell some editing services as well. That's a really good example. You might go full-time editing people's videos online around the world. Now, your YouTube subscription's probably going to be tax deductible, some of your power, some of your internet, because without those things, you're not going to be able to generate your income. So you want to get this concept because you can move some of your expenses over time to be tax deductible. Now, I know that not everybody is going to be, fired up to want to do that, but, this is something that is in Rich Dad, Poor Dad, for instance, and many Kiwis won't read. I mean, I'm an accountant, so this is what I do every day, and I understand this stuff and how far you can push it and what is legal and what isn't. But that's where you need some help, and someone like Henry, they have a live chat to help you figure out what you can and can't be claiming there. So I might take some questions on that at the end, depending on how much time we have. But the main thing there is it's moving some of your expenses to come out of your after PAYE income, and they're becoming tax deductible in some way, shape, or form. But you've got to be generating some income.